I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition, position disclosure. There's no change here. Let's get into some stocks. I can't believe there's a seller in this sumo offering stock down here for some reason. He keeps coming in with some size and getting taken, which is just bizarre to me. Those numbers look really good. See where it is tomorrow, I guess. Yeah, they just clipped that whole 80 algo that was there. That weird seller. Look at him stepping down now. Very, very strange price action. This thing usually moves on its report a bit too. Well, anyway, I guess let's start the meeting here. All right, so we closed down again. SPYs are down about 0.9%, Qs are down 0.75%, and the IWM is up 0.4%. So I guess we are not quite down entirely across the board. Yeah, so today was a tough day, really tough day. Do we actually close on lows like my daily candle says here? Yeah, we basically did, and we're trading down a little bit after the market closed. Look how sloppy this price action was intraday. We were really all over the place. You know, what we discussed in the morning meeting was that we are clearly in a bearish market. All right, I don't think anybody is going to try to refute that point at this time. We're basically bearish on every single time frame here, except for maybe the very big picture time frame. And honestly, that at this point, you can't even say it's really too bullish anymore. Even that's starting to become neutral. So we're bearish on just about every single time frame coming into today. Almost everything is pointing to more downside here for the market, but we always want to keep our positioning and sentiment. I guess I should say we should have our understanding of broad market positioning and sentiment in our minds. And we also always want to be paying attention to our extension rules. And where we were with our flat open this morning, and again, pre-market we were all over the place also, right? Last night we were down, and then by the time we were opening up, we opened up very flat. And I think as everybody knows, I hate flat openings. I like when we have gaps because gaps give me a technical advantage in terms of understanding price action. But we had a flat open this morning. Everything is pointing to the downside. But what we did note from Pat's note, which I will pull up here, and I will repeat my usual, which is that everybody on the team should read Pat's note every day because it is just excellent. There were a couple things I highlighted here from Pat's note that lean towards the side of the bulls, and this is about all you can even come to. A quote from Goldman Sachs. The good news is the dramatic turn in sentiment and positioning does suggest scope for a rebound. At the current bearish levels, the asymmetry for subsequent equity returns starts to turn more positive. Again, does not mean that the market needs to go up, but it's something that's notable here from Pat's note. And then just on the indicators here that we like to look at, our short-term sentiment indicator was again in this buy zone, which to me doesn't mean buy, right? I just, let me repeat what I say in the morning meeting because I know we got some people on YouTube here. When the short-term tactical sentiment indicator is in the buy zone, it does not mean buy. To me, it more means that the market is too extended. It just kind of is confirming what I can see in the technicals, that we've already gone too much to short. And like I said earlier, if you want it to be short in this market, you should be shorting its SPY, 440 or upper 430s. That's where we talked about putting your shorts on. And then this fear greed index hitting 11 here, that is the lowest number on this thing since the COVID crisis in 2020. And I remember at that point, this thing was just literally sitting on zero and as far as extreme fear goes. So we are getting into that zone. And pretty much what this means is we understand in the market how bear market rallies work, right? And we understand statistically that the biggest up moves in the market tend to occur in bear markets. And we've even seen that so far here in 2022, right? this move from the January low to this early February high over 2 weeks. That was a rip your face off rally if you were short and just trying to hold to the short side. And then this more recent low that we also successfully called out, this was a really solid, this was a $30 bounce in basically 2 trading sessions off those lows. So when we start to see things really kind of get, trying to look for some sort of an analogy here, if you imagine like pressure being applied on a spring, and that pressure releases itself, that's kind of what can give you like that really big bear market rally. And where does that pressure come from? It comes from positioning and sentiment. So when we start seeing all of our information from the market that is pointing to, maximum bearish sentiment and positioning, that's a lot of the times when you're starting to get set up for those bear market rallies. And again, you don't want to be short in them. Like I was just saying, if you wanted to be short, you needed to be doing your shorting up here when we called it out as a team into the upper 430s, 440 for the SPYs. Now in this area, again, it doesn't necessarily mean buy coming into a flat open. It's still a bear market right now, but to me it more means that you can't short, and maybe strategically you can be setting yourself up for a buy in certain scenarios if the technicals present themselves properly. But if the technicals don't present themselves properly, you can't just buy and hope that the bear market rally is going to come just because you think it should now, when we know that a market that's extended to the downside can easily become more extended, and that is especially true when we're dealing with bear markets. Case in point, the sell-off here in mid-January. This market was really extended on January 20th. And then it was even more extended on January 21st. And then by the time that low actually came in on Monday, January 24th, we were $30 lower than where you could easily have said this market's too extended, it needs to bounce. So, and that's kind of what we were comparing in yesterday's afternoon meeting, right? Was the degree of extension with where we are now compared to here. Though the interesting point is, even though the degree of extension is actually not quite as large as it was in these other 2 lows, in some ways those sentiment and positioning indicators are I feel like are even more coiled up, if that's the word that I'm looking for, to the bearish side than they were on those previous days. And we do have, by the way, new yearly closing lows for the S&P. So that all kind of brought us into today's trading session where we were flat. And the big thing I was paying attention to that I discussed pre-market. So today was not an easy day, though I would say as a team we navigated it extremely well, like seriously extremely well today. But it wasn't an easy day just because of these headlines, and we can start that with the pre-market here. We got our first real headline that hit at 8:10 a.m. this morning, when it basically came out that the United States was going to put this embargo on Russian energy, and then President Biden was supposed to speak at 10:45 this morning. So you can see here that initial downtick at 8:10 a.m., and you can see oil at 8:10 a.m. ripping higher off the same headline, which actually makes sense. Going back to the market here, so when you get this type of news move, most likely what's going to happen if the news is important is that the market is going to continue in that direction. But we want to also know at what point that news move would be technically negated, right? Because that's also going to be very telling to us. And that move would be technically negated if we get above the 8:10 a.m. high. The 8:10 a.m. high was 420.44. So that was the number that I was really kind of paying attention to this morning. And you can see here, we were trying to kind of tick above that. We were trying to tick above it at one point here. Pre-market, 8:50 a.m., going into the morning meeting. We tried to tick above it at 9:20 when I was doing the morning meeting, but we never really got closes above. And then even when the market first opened, we got these like quick tails here, almost back above that 420.44, but we could never get the close above. So we were never really able to negate this news, because again, when you ask yourself these questions about how detrimental is it to the market, to the S&P, of this Russian embargo, you also have to have some second level thinking on what degree of it's already actually priced into the market. Was the market expecting this move to happen? Were they pricing it in? And we know that there are already a lot of bipartisan political pressures coming onto the U.S. government to actually make this move. So maybe that's already actually priced in to some degree, or maybe it's not. But one interesting thing here to note is that while the S&P and the Qs were particularly kind of weak here, the IWM was actually holding up really well in this first hour of the day. And even as the S&P and the NASDAQ were weak, they weren't really kind of breaking down with any degree of ferocity. And I was kind of noticing that, and I thought it was interesting, and we were waiting for 10:45 a.m. for the president's speech, where he basically just came out and said exactly what was expected, and I thought maybe that could be like a sell the rumor, buy the news type of situation, and that is kind of what happened. Once the speech ended here, we started to get this uptick, and I called out very early, I think at 11:45 a.m. into the VTF. I think I typed it in there. That I said I think that this rally could be a rally that gets some legs, and this seemed like it was it. We got through Biden's speech, and then at the same time into this up move, we started to see some positive information start to come out of Ukraine. Basically saying that they are considering maybe not pursuing NATO in the same way, which by the way, that's one of Russia's talking points. It's not the right word I'm really looking for here. It's one of Russia's demands, I guess, on Ukraine in order for the war to end, is that they want them to recognize Crimea as part of Russia. They want to recognize the independence of those two provinces. They want them to change the constitution so that they can't actually become part of NATO. And that kind of hit in the same time here. So we started to get this relief rally that was coming into the market once Biden was done speaking. We got further positive news there, and then just as things were looking good, we start to get this technical pullback, and then pretty quickly into this technical pullback, we see Putin coming out and saying, okay, you guys are gonna put an embargo on us. Well, how about this? We are banning all of our exports of Russian energy to everywhere, is basically what the headline seemed to be. And there's definitely some speculation here in the VTF, which I think is proper speculation, that he's just saying that and he's not actually going to do it because it's too much money. And while the United States is now planning on doing this kind of full embargo on Russian energy, I don't think that, maybe someone can correct me if I'm wrong on this piece of information, I don't think that is actually 100% true with like all of Europe. Like I think Germany is trying to cut back, but they kind of need it. Germany really needs that natural gas, or things are going to get pretty cold and pretty expensive there. So I think that they're trying to cut back where they can, and then but so that would be particularly bad for a country like Germany when Putin comes out and says, we're stopping all of our exports. And just as that happened, just as market's looking good, we get some good headlines that start to come in. Then that headline comes back out, and we basically retrace the entirety of the up move. And then it basically just turned into sloppy price action into the close. We finally got a little bit of a bounce, and we actually caught this bounce pretty well too. And then MOCs came out, almost $3 billion to the sell side, and we kind of continued our way lower, closed pretty much at lows, and now right now this market looks like it's trading at 415. So we just broke the daily low here as soon as the market closed. But so that indicates in this moment at 4:24 p.m. Eastern that we might gap down tomorrow, but who the heck knows where we'll actually be by 9:30 a.m. tomorrow. The market is definitely getting extended, but we are still in a very bearish market. We'll assess tomorrow morning's gap. We did a great job. I mentioned this in yesterday's afternoon meeting. We did a great job buying both of these lows, recognizing the information, recognizing our degrees of extension. And the question I was asking yesterday's afternoon meeting is now, if we get a third really large extension move here, is that going to be viable in the same way? And I'm not 100% sure. So let's see how we gap tomorrow morning, and we'll kind of take it from there. So that's the market. Certainly a tricky day, but like I said, we knew our important areas. We weren't rushing to buy thin air if it wasn't there. We waited for technical confirmation. We bought really at the right time as a group around 11:15 or so, which, by the way, that seems to be when we keep kind of having bottoms. We didn't, not yesterday, but today and Thursday, Friday last week, three different days, so we've had 4 weekdays in a row now, basically, if you include today. On 3 of the 4 of them, we got significant bounces into the European close. So as we were approaching the European close, that was the low of the day Thursday last week, that was the low of the day Friday last week, and that was the low of the intraday today. And again, obviously, we're below that. We're below that further now. But I do think that that's notable. It shows you how important Europe is becoming to the market as a whole. As far as individual names go, one thing I really had on the radar today, which I ended up not trading, was these financials. I know Josh did a really good job with them, and I know that this XLF still ended up kind of closing weak. BAC was the one in particular that we were looking at. You had this kind of intraday support, and the reason we were looking at BAC. So first of all, let me just take a step back. Going to these financials, right? Just really extended to the downside here at this point. I do still kind of like them from a fundamental basis, though they're having their issues. One of the things that was interesting to me was that the banks led Japan lower, but they were really strong in Europe. So pre-market this morning, we were looking at Deutsche Bank up 10%, and now even still now closed up on the day 7%. So I thought, given that the financials really were strong in Europe, that we could actually see financials maybe lead today. Though with that said, we know that the XLF is kind of a broken chart at this point because it lost this really important $37 area. But very extended to the downside. Coming into day 4, negative Maribozu yesterday. So I liked the idea of looking for like a red dog reversal, Oldensmith overthrow trade back through yesterday's low versus today's versus the low at that time of the day, should that actually happen. And the one that I liked the most was Bank of America, because Bank of America got upgraded. And you can see here that the XLF still basically closed on lows along with the market. It's not a good looking candle. It's actually like a continuation doji here for XLF. It really actually indicates lower prices. But Bank of America was able to hold up okay because of the sorry, I got distracted by a Slack message. Bank of America was actually able to hold up okay, had some relative strength because of the upgrade, and you can see it held support really well. I think Josh called out a buy right into here, right as I was saying. I think this market gets some legs, and it gave kind of a nice little bounce there. But it's also, like I said, there was a bunch of other names at one point in the day early on that were showing relative strength, and then I kind of stopped watching them, except for Labu. Labu was a big focus of mine, and I really liked the relative strength that was coming in here around this like 10:25 a.m. time. You can just kind of compare, what the market was doing at the same time. SPYs were making lows, Qs were making lows, but this Labu was actually holding up, and it looked like it wanted to go after highs, so it was showing some intraday relative strength. Looking at some others, I remember someone calling out Roblox into here, was showing really good relative strength at that 10:30 a.m. time also, breaking the high of the day. There was one or two others. Labu was the one that I kind of ended up focusing on. So that turned into a pretty good trade once this market was able to finally get a bounce. This XBI, I feel like, has been trying to be relatively strong. It's been trying. Yesterday it was trying to be relatively strong, but the market was too weak. Today it was trying to be relatively strong, but the market was too weak. And one of the things I like to say, and this could be applied for Bank of America today, it could be applied for the Labu, which I was in, and this ended up being one of my better stocks on the day, is that this is why relative strength is important. It's an important layer of probability, but the market itself is an even more important layer of probability, like most of the time, because it doesn't matter how relatively strong your sector is. If the market just keeps getting hit and hit and hit and hit, then eventually, the relatively strong sector in stock is going to start taking a bath also. It just ends up playing catch up. So that's that. Energy today, we're continuously monitoring the energy stocks. I'm out of them. It's a very high volume, big picture doji here. I still really like the energy stocks, big picture, like all the majors. I like Oxy, I like Apache. But I have, like I said during the day today, I have extension rules. Those extension rules pay me in the long run, so I have to pay attention to them. I have to follow them. And while I really want to be long these stocks, and I do think that they have the ability to go higher big picture, they've just had such a huge move in such a short period of time that I want a real dip to be able to get back in. And I almost got that dip today. You know, arguably I could have started to buy Apache near those lows, Oxy into this pullback, and you guys, a couple of you guys caught this low like perfectly in Oxy here, which is just fantastic job executing. I was looking for a little bit deeper of a pullback. I honestly thought you guys were early when you were calling out the buy there, but it worked. Some more power to you. I want to start looking at this Oxy at $50, $48, kind of that area, to see what it looks like. And this thing still just held up like a champion. So maybe this turns into another bull flag time correction type of situation. We'll see how that plays out. Yeah, and I guess that's more or less it. We had the solar names on the radar today. SunPower gave fantastic continuation. Unfortunately, I got pushed out of my swing trade in this near the low on March 2nd. Beautiful continuation today. Someone brought this up in the morning meeting, and $18 was someone brought up Nova and SunPower, and then Josh brought up TAN. The TAN and Nova, I didn't like the spot on the chart as much for the entry execution, but the SunPower entry execution was phenomenal for $18. Very, very clear level here at $18, and you could have gotten in this thing for 10 cents risk today for a $3 and 25-cent move. So just 32x or something like that. Your risk on this day trade that probably should turn into a swing trade for anybody that actually caught it. So that was solid. And I know we also discussed Felipe was really focused on the semiconductors. So we're looking at Soxel today for a similar kind of red dog reversal, Oldensmith overthrow trade through yesterday's low. And this one's another one that was holding up pretty well here. We discussed if this thing could start clearing this $29.80 to $30, that it could get some legs. There was a little bit of slop into this pullback. Never broke lows though, and then gave really good follow through. One of the ones that I was looking at was specifically this Micron. 76 is a really important level. I'm happy to see it closed above 76, but we also discussed a similar, fourth day down, trading through 76 snapback type of trade. And then we intraday here. I don't think it was by me, but intraday someone communicated this bar that came in at 940. That was your perfect execution bar, getting back through the previous day's low, decent volume on it, really kind of giving you that pivot low, and that turned out to be the low of the day. So, like I said, today overall was a really difficult day, but I think we navigated it about as fantastic as you could. The intraday movements on the SPYs, despite all the news, we called them, really perfectly. The names that we were looking at, we were really on point with. We were patient with our execution. We didn't buy on the way down. We bought on the way up. And that, if you really were disciplined and patient and followed your execution rules there, you probably made money today. Despite all the wacky price action, I'm actually up pretty decent as far as my P&L goes on the day. So I'll take it. At one point, I was up a lot more. When the market was at highs today, I was up a lot more. I did give back a lot of P&L from my highs, but it's still a decent P&L day for me, all things considered. So I guess with that said, I am happy to look at and answer any questions that you guys have here. So scrolling up into the VTF, I think the first thing I'm seeing here is from Chinggis in the March 3rd daily recap. Okay, that was the false breakout day. I spoke about tape reading and taking the trade in a circuit broken stocks. It's the same as an oversold bounce trade. If not, what are the differences? It's totally different. A circuit broken trade, is trading the tape there. That's entirely based on tape. It's really more of a scalp, and that scalp can turn into a bigger picture trade. And again, you always want to be looking at your charts, even in a tape-based trade. And I don't love tape-based trades anymore. It's something I definitely always make sure to say as a little asterisk whenever I kind of show any of them. But it's a pure tape-based trade. oversold bounce trade. First of all, I don't have a trade that's called an oversold bounce trade. I would say that. I think that that term is too generic. That situation can happen in many forms. One way in which I look for an oversold bounce is like the hammer capitulation buy setup. That's an example of a trade that can take advantage of a situation where the market is oversold and you're buying it on the way up, and you kind of have execution there. So I don't think oversold bounce trade is really even a type of trade, or it almost seems like a genre of trades, if you will, where you could have like a king-queen reversal, you could have the hammer capitulation buy setup. Maybe you do even want to put a circuit broken tape reading trade into the category of oversold bounce, if you will. But I kind of think we have to have some differentiation there. So I hope that helps, Chinggis. Next from DJ. Sometimes when the market sells off, it seems like strong, overextended stocks sell off hard while beaten up stocks hold lows. And other times, weak stocks sell off hard while strong stocks hold. It's also possible I'm seeing things in tunnel vision on specific sectors. Okay, I don't really have too much feedback for you on that, because you're kind of speaking in very generic terms, and I do think that we kind of have to have some more specific examples there to really understand what's going on. Like when we're talking about relative strength, first of all, there's a difference between relative strength and overextension, right? You can be relatively strong without being overbought. And if you're overbought and the market pulls back, then there's a very real chance that you're going to see a heavy pullback in that stock because it's overbought. But you could also have something that's relatively strong, like just to use the Labu example, because it was recognizing this paid me pretty well today, and I think it paid Felipe pretty well today too. Recognizing what this was doing in here, and again, really it's just the leverage XBI, right? Recognizing what XBI was doing here compared to what the Qs were doing here, that is relative strength. But there is no extension here, right? So that when the market caught a bid, this thing was able to really kind of lead, and that's what I was looking for. And when the market pulled back, this didn't pull back as bad, because it was never overextended. It was just relatively strong. So I think that that's an important differentiation to make. Let me read the next part of your question. Is there anything we can take away from the first scenario? Maybe the market is more likely to bounce when weak stocks. Nah, yeah, I think it's more about how I kind of answered the question there. And let me read the third part of your question. Sometimes when the market sells off. Oh, okay, got it. Nope, got it. Okay, I think I answered your question, DJ, despite the copying and pasting. So I hope it helps. Cool. Next here, Robert confirming what I thought, which is that Germany is staying with Russian imports and exports for the time being to some degree. My buddy Brandon, can you give your thoughts on the daily candle for the indices in conjunction with the volume on the day? Sure. In conjunction with the volume today, had a bounce, didn't hold. Does that give higher probability of a lower leg coming? So hard with 4 down days in a row in a news-driven market, but we could possibly open below recent support and have a gap and go on fear. Yeah, so volume was a little bit higher today, which is interesting. We closed at or near lows, and now we're trading down here a little bit. This is basically, did we really go that high in the market? Man, there was so much volatility today. Yeah, we really did. We really traded up almost to the 80 MA on the daily chart. We're not like that extended, honestly, in my opinion, where we can't go lower. We definitely can. This is a bearish continuation doji at this point. You guys are all familiar because we've been very used to uptrending markets with the hammer continuation doji, which is something I like to look for buying uptrends, right, within a trend. It's how a pivot low is formed. This is basically the opposite type of candle. This is a pretty bearish looking candle, and we closed on lows. And again, the only thing that I can really come up with to support this market is the information I said in the beginning of the morning meeting today, where I talked about, you know, sentiment and positioning. But that information is not information that means that we have to go up. It's just information to take note of, because that coil, to use that expression I was trying to use, is getting pretty tight. But it can get tighter, and this market can continue down further. And the second part of your question, comments here about a gap and go to the downside, that's also what I keep kind of thinking about a little bit here. You know, when I've spoken about how we were able to nail these two bottoms really well because we understood extension and we got the gap down that we wanted on each of those days, I'm starting to get concerned that, you know, one thing that we did not see at the open in this big gap down on February 24th was panic selling. In a lot of ways, we still haven't seen any panic selling. Maybe we saw some panic selling on January 24th, but that's almost forgotten history at this point, and we're trading below that low. So I do think, despite the degree of extension, despite sentiment and positioning, that there is a real chance that the next, like if we get the big gap down again tomorrow, that's not going to be as easy as this one was. There is a real chance that we actually really finally see panic selling. And then does that mean that it's a bounce that just happens later in the day because you got to get the panic selling out of the way? Or does that mean that we get like a real full-on gap and go type situation to the downside? I don't know. But I can tell you, and this is what I was saying earlier, I want to assess in the morning based on how we gap. I can tell you I'm pretty sure that if we have a big gap down tomorrow, if we gap down to 410 or more, I'm not really going to have the same buying conviction that I had, I don't think, on February 24th off the open. It kind of feels a little different. The technicals feel a little different. The extension doesn't feel quite the same. And today's candle is certainly a bearish candle, to just directly answer your question. So, good question, Brandon. Hope it helps. From Sebastian, hey Derrick, can you explain the best way to execute an RDR? Today I was looking for one in LYV. What is LYV? Is that Live Nation? That's what I thought. Since it was at support, it had an inside 5 at 940, and I wanted to buy the break, but it was to the downside. I thought it was too weak, and I took it off my radar. Excuse me. But now I see that it came up right after. How would you execute this? And do you think it was a good idea? Sure. So I can tell you the official way on how to execute that type of trade, and then I can tell you the way that I prefer to do it when possible. So the official way to do it is very simple, but oftentimes it leads you with a lot of risk. And maybe that risk is justified if the reward is there, and maybe it's not. So the official way to do it is very simple. Really, technically, you want the stock to open in the previous day's range. It's got to be at least the third day down, by the way. It's got to be at least the third day down. You want it to open in the previous day's range. You want it to trade it down through the previous day's low, make its own low, wherever it stops, and then you buy it on the way back up through the previous day's low versus whatever the low of the day is. So just looking at the daily candle here for Live Nation, you would want this thing to open above yesterday's low, which is 99.86, which it did. You want it to trade down through yesterday's low, which is 99.86, which it did. You want to buy it at 99.86 on the way up, and then you want to use the low of the day as your stop. So you basically would be buying 99.86 on the way up, and your stop would be 98.01 or $98 even, the low of the day today. That's technically how you're supposed to do it. Sometimes the intraday on that can be sloppy. It breaks the previous day's low, it comes back, it breaks the low of the day, it stops you out, it makes a new low, and then it kind of continues. It doesn't look like that's what happened here, but that does happen sometimes. What I like to do personally, when possible, and it's not always possible, is anticipate that this RDR situation is going to happen ahead of time. Take a trade on a small time frame chart ahead of time, and then that can give me a much better risk reward when the trade actually occurs. This goes back to my philosophy of looking for intraday risk, 5-minute chart risk, for daily chart style reward. And again, on this chart in particular, I really don't see anything here. But you know, if this gave you a hammer capitulation buy setup on a 5-minute, if it gave an inside and up, which sounds like is what you were looking for, but it broke down, so that negates the trade. That, you know, these are ways to basically more or less cheat on the RDR, which can give you a significantly better risk reward. So that is technically how to trade it, and that's how I want to trade it. So it looks like your thought process was in the right place. It just didn't really give you the proper setup to be able to kind of cheat on it like we were looking for. From our buddy Marty, look at the IWM weekly to November 20th. IWM weekly going back to, what'd you say, November 20th? Oh, November 2020. That makes more sense to me. Yeah, November 2020. I remember this when the IWM broke out here. The gap is IWM heading to fill it. Cheers from Upper Manhattan. Yeah, I remember this breakout very specifically. This was a very serious breakaway gap on the weekly chart here. Really, really nice. And that was after kind of getting back to those COVID highs. IWM was relatively weak, and then this in November 2020 is when IWM took over relative strength from the Nasdaq for a period of time, and played some catch up, because up until that point it was relatively weak. So is it heading back down to fill that gap? Is the IWM going to 164, another $30 lower for this index? We are going to be in a hell of a bear market if that happens. Another $30 down. Yeah, we're going to be in like a really, really bad bear market if that happens. I don't know. Marty. It's too big of a call for me, to be totally honest with you. This certainly on the weekly chart here is looking like a bearish pattern right now. Maybe that bearish pattern, if this breaks, could double this initial move here. 225 to, let's just call it 190. Just keep the numbers simple here. So it's at $35 the downside. So that would bring you down to one. Yeah, I mean, and that would be on the break here. $35 in downside from, I mean, that would bring you down to that area also if that happened. It's just doing some very rough technical analysis. That's a little bit too big of a call for me, to be honest. I try to avoid making calls that are that big. If I'm with the trend and the trend is in my direction, I'll ride it as long as I can to capture those moves. But I really don't try to make calls that big this much ahead of time. I really am trying to take it one step at a time. And what we know right now is a bearish pattern in the weekly. There's no support, by the way, outside of this recent support that's been established at like 187. You lose that 187, there's really no support here for the IWM. Also, all the way down to that 168 or so. So we'll see. Bears are in control. It's a bearish pattern on the weekly. We have a bearish pattern on the daily. We're in bear territory on the daily. You lose that area of support. Yeah, it's the next area of support that you're talking about, but I kind of want to take it one step at a time before we get there. Next from Jackie. I took a trade in Micron. Awesome. Oops. I took a trade in Micron today through 77.17. Is that the opening high? 77.17 is the opening high. I'm assuming you did that here at 12.10. You did. And around 12.10 versus the low of the ignition bar. This is not an ignition bar. I'll get back to that in 1 second. I took a smaller size because the time of day wasn't ideal. Great. And the ADMA hadn't caught up. The ADMA is kind of low of that bar. at that time, but okay. To load the ignition bar, it's almost there. I had my first price target at the 80 level. Okay, I'm hoping that that's after your risk is covered. Get the risk covered. Where the daily 200 SMA was. Okay, it's a flat daily 200 day. Was also at but only had 100 shares left after kicking my 1-to-1 and didn't want to exit out of the position at $80 in case there was a bigger move. Yeah, I mean, it's a curse of 100 shares. You know, that's what I talk about as the curse of 100 shares. It's just unfortunate. I don't have any good advice for you on that one. You know, it's a difficult situation when your stock is looking really good and you're with the trend, but you have a target and you only have 100 shares. Do you just get out at your target or do you trail it? You know, really difficult. I tend to trail in that situation, is what I tend to do. Try to lock in my profit, but let it still run because I'm kind of in a win-win situation. But to be totally honest, I mean, this is just where having a bigger account is just, you know, better because you can be heavier and it gives you more ability from a game planning perspective. I know that doesn't help you at this time, but it doesn't make it kind of not the truth. So I tend to trail in that situation. Let me read the second part of your question. I would definitely try to take 25 to 50% off there, absolutely, if you had more size. As the market was also running into some resistance at that time, but was still looking good. I decided to trail the remaining shares on the 15-minute chart. I love it because of the time of the day. And you got stopped out at 130 after giving back a good bit of P&L. I don't think you could have done it any better. You still closed out the trade green. Do you think I should have exited at 80 and looked to add back lower or maybe trail a little tighter on a 5-minute chart? I think that you did all of that perfect. Perfect. You decided to trail. You chose, I think, the perfect time frame for that trail as well. You were game planning in such a way where even though you gave back a good bit of P&L, I gave back a lot of P&L today too, if it makes you feel any better, you still finished green. So I think everything you did there is fantastic. The only thing that I don't like too much is calling this an ignition bar. An ignition bar is a candle in which a resistance or support level breaks, but it really should be a daily support or resistance level. I don't think that just because you've got a 5-minute candle that's breaking the high of the day that it qualifies as an ignition bar. The volume's not terrible for midday, but you do really want to see a significant volume uptick to also confirm that what you're looking at is a true ignition bar. And you do have an uptick in volume here, but it's not so significant. It's not even like the highest bar that it put in, you know, kind of in the midday type of session. I think everything else there in your explanation in your trade is actually perfect. So good stuff. From PMD Trading, are they mixing up RS and RSI? I'm not sure where that question is directed at. I don't have the RSI up in front of me. From Natalie, thoughts on AEM? Yeah, you know, gold miners have been fantastic. They're extended to the upside. So I would probably take some off into this degree of extension just to lock in some profit, while also continuing to hold in case the momentum is able to continue. So basically, you know, trim and trail. Looks fantastic. It's just getting pretty extended to the upside. From Cedric, do you think we might have a top with the XLE? Daily volume looks so high. Daily volume is so high, it looks like a pivot candle. Yeah, when I brought up the XLE chart before, I was definitely thinking that. We have what's called a spinning top doji here on high volume. It represents indecision or change. It kind of tells us what I think we already know, is that the XLE really needs a correction of some sort, time or price. I'm hesitant just because of the degree of momentum and the amount of headline news and headline-driven market that we've been in. I'm hesitant to call this a top. I will say that it's notable for sure, and I really think that these energy stocks are due desperately for some sort of time or price correction. Last time I said that was the beginning of February. and they corrected for a whole month, and then gave, you know, a month of consolidation and a fantastic break higher off of it that we caught as a team really, really well. And I've since exited the positions I had in energy stocks, perhaps a little early, you know, a couple days ago or whatever at this point. I think that the XLE big picture, I do think, is continuing higher. I still, in some ways, the Russian news is just, you know, fuel on the fire on top of a situation that was kind of already going on here when it comes to supply and demand for energy. That maybe, you know, front-loaded the move a little bit faster and earlier than it would have been otherwise. So I do think that we need some sort of time or price correction. It's an interesting candle. It's on big volume. I can't help but wonder if we get some sort of triangle that builds out here, which would be a bull pennant that lets these moving averages catch up and satisfies some of the overbought conditions on the sector. We also could easily get a price correction. You know, you could get, just for the energy bulls that are out there, guys who have been doing really well and being long on this, I just want you guys to realize XLE could go back to $72 very easily over the course of the next few days and still be bullish. So for the people on the team who've caught this move, awesome. Just make sure that you're comfortable with that situation. And if anyone's late, I don't know if anyone actually is late on the team or not, because as a team we were so early on this, but if anyone's late and they really only got into this, you know, yesterday or today, and they're long and they're keeping it long overnight, it's dangerous. And you know, make sure that if we're looking at XLE at $72 over the course of the next couple of days, and it's creating a pivot low and it's creating a great buying opportunity, that you're in the situation to be able to capture that buying opportunity, and that you're not really hurt should it actually happen. So I really do think this is due for a price or time correction, but I also understand momentum is a hell of a thing, especially when it's driven by headlines. And you know, while the volatility on this thing was all over the place and the volume was huge, the right headlines keep hitting, and we could be really breaking through $80. Though I have to ask myself, from a short-term perspective, if energy names have been driven by headlines, what is the next headline? And I'm asking you guys this as a group, because I can't think of one, but maybe some of you can. What is the next headline after a Russian embargo and them also then saying that they're going to stop exports? What's the next headline from that situation that short term could really continue to propel XLE higher on, you know, further momentum and further volume? It's something to think about, because I think we're kind of running out of headlines there for that situation. So I'm not saying that it's impossible. I'm saying it's very possible for this thing to have the momentum to continue higher if the right headline hits. I just don't know what that headline is, and I do think, just based on your technical rules, that we need time or price correction. So great question, Cedric. Appreciate that one. Yeah, Brandon saying that if we get a real panic for the market, that it should hit everything, the good and the bad names. Yeah, and that is what we always see in history, is that when the real panic selling hits, like we saw in COVID, they sell everything. Everything must go. And you're getting a margin call somewhere else, you got to sell something else that's trading really well. So we, to some degree, haven't actually seen that in the 2022 market sell that we've had so far. Yeah, Nick says he wants the panic. Summer driving season demand and gas prices staying above $6 per gallon or higher. Yeah, that'll do it at a certain point also. Man, I'm not looking forward to driving back to New York in April or May, or whenever I actually do it, with the price of gas the way it's going. Every time I drive past the gas station here in town, it's even bigger, which is what we expected. My farmer neighbor over here is very appreciative of me, because when gas was still under $100 a barrel right before this last spike, he reached out to me about managing his finances, because he's got a really big gas tank on his property that he uses for all of his Caterpillar type machines and stuff. And you know, he was like, you know, I'm kind of worried about energy and food, which he's always worried about, energy and food prices, probably for good reason, especially given that he's a farmer. It's something to pay attention to. And you know, he was like, you know, I'm balancing my budget like I always need to. And you know, what do you think about oil? I'm thinking about, you know, loading my fuel tank here earlier than I typically do. I was like, I think you should do it. And he dropped off some meat from one of the cows that you guys can't see that I'm seeing out the window right now, but I guess last year's cows as a thank you for that. So that's what I'm going to be eating tonight. Robert asking, why am I not flying? Why am I driving? Well, I did fly here when I came here in October. It's because it's a multi-month trip, and I need a vehicle was the biggest reason, but also just all my stuff. You know, four big screens here, desktop, all my stuff, plus the need of the car itself. Just too much of a pain in the butt to honestly ship all that out. And I don't love the drive, driving from New York to Idaho, but I don't hate it either. So far, I'm sure that would get old pretty quickly if I continue to do it all the time. But I actually genuinely enjoy like getting to see all these new cities, getting to see all these places on the drive, and got, you know, spent a week in Cheyenne, and did a night in Columbus, Ohio, did a night in Kansas City. You know, on the last trip, I did a night in Cincinnati, which I really enjoyed Cincinnati. Did a night in Omaha, Nebraska, which I enjoyed. So, you know, life has been in flux, but I'll figure it out over time. All right, guys, just after 5 o'clock here, so I'm going to call the meeting. Great job today, I think, overall as a team, navigating what's been a tricky market. Things are definitely a little scary right now. We'll see how we gap tomorrow morning, and we'll assess things, and we'll take it from there. So have a great night, everybody.